Okay, we're live.
Good morning. Good morning.
Good morning.
Good morning.
Oh man.
Yeah, Nate, you're late for your shift.
Oh
Poor
man.
Nate.
I can't. I mean, what? Nebius is up. You guys said 9-10%.
Yeah,
Yeah. I mean,
nine and
basically
a
10%
half.
almost.
Crazy.
It like did its implied move. Isn't the implied move like 11 or 12% or something? Like,
Yeah.
Around, yeah.
I'm just gonna restart my computer real quick.
all right, cool. So we also know that the report drops in 30 minutes, right?
No, in 2 minutes.
Oh, is it in 2 minutes? Okay, sweet. I wasn't
In
sure
2
if
minutes?
it was 7 or
Yeah.
7:30.
In
Ooh,
2
baby.
minutes.
Just keep spam refreshing the IR page.
While we're waiting on that, did you guys see the Bank of America news today related to the data center build out?
Yeah, I saw the headline at least.
Yeah, I since I can't share it since Tevis is resetting. In case anybody else missed it, Bank of America plans to deploy 250 billion through mid 2027. This is not just for data centers, kind of like the 500 billion from Nvidia and Apollo and all those other private equity firms. It's across the whole supply chain, including energy. So, yeah, big money is lining up clearly on one side of the bet. It's the side of the bet that we're on. So that's fun.
It's insane. I feel like we've seen an entire sentiment flip in like a week. After Citadel said we're going to get hate rate hikes, and then they bought Leopold's book. Ever since then, it's been, oh, AI's back. We're going to have rate cuts. You know, Nvidia, BlackRock, all they're doing 500 billion. Bank of America doing 250 billion. All the AI earnings are crushing. So
Oh, yeah.
it's sort of the meme of we're back because it feels like it. Definitely feels like it.
And so Manuel, you may have seen this like circulating on X and everything. One of the coolest quotes, which plays also into Nebius and this whole thing, is one of the big bearish talking points has been depreciation cycle and skepticism on taking that further out. The A100s, which are a 2020 chipset, it's ancient technology typically. CoreWeave said, "Hey, we went ahead and negotiated a contract for a nice value, probably around what they originally were getting back in 2020 through 2029." So people that are saying like, "Hey, this it's all just financial engineering and they're changing things with depreciation." When you're literally selling GPUs at that point, that'll be 9 years old for what you got or around what you got when they were initially new. Something's
Did they
happening.
mention did they mention that the value was around what they got originally?
The exact quote was for a nice sum or nice value or something like that. And so yeah, I just it may have been a little bit less, maybe I don't know if it would have been more, but
Okay.
yeah, the hoppers like everything else that they've been signing, they've said it's at least over the last year, it's been at the same level, if not higher, over the last year. And like it's not just CoreWeave, it's everybody that's seeing this. So
Yeah.
the demand is
Yeah.
crazy.
Yeah, I mean,
It's insane. I mean,
it was already clear, but some bears keep pushing on the same premise.
They're living in the past.
yeah.
It's like one thing if it was just like, oh, it's just speculation, and these guys are saying the depreciation cycle should be longer. When customers are paying for it, it's real.
Yeah. Yeah.
No
Uh,
results.
We're up over 10%.
We were
Yep.
already.
You can thank
up
CoreWeave
9.
earnings for that.
Yeah, seriously.
Yeah, it's like we already made
Yeah.
our earnings move before earnings even dropped.
Numbers come out at 7 or 7:30.
That's what I was wondering.
Right.
I don't.
Usually it's right now.
All right.
Yeah, I keep refreshing, but I'm seeing nothing. Yeah, I really hope
Like-
they just come on the call and kind of do Andy Jassy approach and just, in very layman terms, explain why it's an ROI of what they're doing. I feel like we all understand it, but I feel like the market really loves that for some reason because they can't comprehend ROI at all. And so even just spelling it out as to where the ROI is coming from or what it's like or the depreciation periods or payback periods, I think that would be great to see.
I think the scale and speed of this is what the market is having a hard time comprehending, and I think that that's fair, just because
Yeah.
we've not seen this before. This is different than any other technology wave that we've seen, and that's through human history, those tend to the adoption, the acceleration curve, and everything tends to. Yeah, I'm tired of that, but it tends to get faster. So
Yeah.
I think some news on the asset light model that they announced like a month ago or so. Some updates there. Maybe they can already share some extra info on how many clients.
We even heard CoreWeave last night talking about they had sovereign people or companies looking at them. So I think they also see the same demand. And they just Nebius just named it a different revenue stream, and maybe CoreWeave hasn't yet or something, really. Or maybe CoreWeave isn't looking to do that, But I thought that was interesting.
I wonder if they're going to update their forward guidance or not. Gigawatts or ARR.
My prediction is they don't. They just tighten guidance. So from 7 to 9 billion to 8 to 9 or something like that, or 7.5 to 9, rather than raising it. I think they want more confidence from Vineland and making sure that's actually going to be not delayed. And then probably next quarter, if it's not delayed, they'll raise ARR. I think they're going to be conservative.
But next quarter is really the opportunity to announce 27 guidance.
That too, yeah. I think Q3 will be insane, honestly. If Vineland doesn't get delayed, I think it'll be nuts.
Yeah, I think that's the only realistic thing that could go wrong with the earnings call but it'd be better to hear if things are delayed. And a delay isn't a destruction of the thesis. It just pushes things back a little bit. So stock won't like it maybe initially, and that may not be what's happening. So do you guys think that they're going to announce a new contract?
I usually don't think so, but I had a dream that they would. So
Great analysis.
I don't think
Solar
they
eclipse
will
today.
Yeah.
But I did speculate for fun in my video that they might. But I think it's. I mean, Google did say Q3, but it's not impossible to see a Google deal. I feel like, but I don't know. It's a toss up.
We have CPI today as well, right?
Yeah, we have CPI today too, which is insane.
they're waiting to drop it at the same time, maybe.
Yeah. It's going to be crazy. Like, and I know a couple of you guys also on CoreWeave too, or most of you guys as well. But like that one is like, if Nebius reports well, the market likes it, adds a little bit more fuel to the fire. And if CPI comes in cool, which I'm not expecting, but hey, we can dream. Right, Manuel? You can dream. I can dream too. It'll be a fun day. Both of these, like I'm not in these for short term, but both of them have short interest in the 20s%. So things can get really, really volatile. I mean, they have been, but
30 into the call is CPI. Call is at 8. Earnings should be online any moment now.
Yeah.
Manuel, you think they are going to increase gigawatts, active power gigawatts guidance?
For this year?
Yeah. This fiscal year.
I'm not sure because of Vinland as well. Like they might, even if they are confident, it's like not entirely under their control. It's more Data One and even all the controversial about public opposition and all that. So they might be conservative on that side, but I think they will for sure raise the contracted power guidance again, because there hasn't been a quarter they didn't increase. But on the other hand, they might have like a bunch of other collocations that we don't know about, like similar to what CoreWeave does, just for these short term. Because in the short term, we can't expect them to bring a lot of their own capacity, like the data centers they're building. So they might have a lot of collocation deals that we don't know about to like catch up with CoreWeave faster. Otherwise, in this quarter, they couldn't really bring that much capacity online.
Yeah, I'm trying to refresh the page and I'm getting this error. It just says error 500. The server could not load the page.
$500.
People are just crashing the Nebius IR site.
That's what it seems like.
No, you can't look at the IR site, man. If you want instant news, look at the stock price first, and if the algos have reacted, then look at
Yeah, exactly.
Yeah.
That's what I'm doing. I only refresh it if we get a sudden bump.
Stock is down a bit, huh? So who knows?
Selling off a little bit.
It's now only up 8%.
Let's sell everything. It's going to zero.
Oh baby. So maybe it is a 730 drop.
I mean, I think one quarter it was at like 710, 7
Okay,
9.
yeah.
Like, it can be 730, but I think it could be at any minute.
So one of the remarks that might be very short-lived from CoreWeave yesterday was they brought on 500 megawatts of capacity in a single quarter. And they're like, hey, that's more than, to put it into scale, any other NeoCloud has right now. That might last less than 12 hours.
Yeah.
With Nebius reporting here. So that'll be fun.
Man, the
No,
A100
it shouldn't.
yesterday was like signing an A100 contract into 2029. Like, if you look at the depreciation, I think Nebius is like what, 4 to 5 years is their depreciation.
They just moved to 5 last quarter.
Yeah.
And meanwhile, it's like CoreWeave is having like a 9-year useful life for the A100.
Yeah, it's like it's after 5 years, it's just straight profit.
Right.
And if you can extend it, and I don't even think 2029 would be the end of the life for that product. It might even see 2030, 2031. And I mean, it won't be as profitable and it won't be at the same rate probably, but it will still exist and still be generating some sort of cash.
Yeah, the funniest thing is, not long ago, with both Nebius and of course CoreWeave, bears were saying because of the depreciation, they're like, oh, Vera Rubins are coming out, so now nobody's going to want Blackwells.
Yeah.
People want A100s. They're going to want Blackwells.
Yeah,
Exactly.
It is a bit like a cheap foundry, like with TSMC. You can see that the older nodes are still 8% of the overall revenue, even though they are older nodes. Just it's extra money.
And I even saw someone comment yesterday that they're a software engineer and they still use NVIDIA's T4 GPUs from like 2017, 2018 for machine learning. So he was basically, his argument is like, depreciation thing's been out of the water for a long time. I mean, they use 2018 products, almost 10 years old, for machine learning still at his company. He said he's a fairly big enterprise company. So, I don't know. It's just wild.
Tabis, maybe pull up the stock price to see how fast this thing can drop or skyrocket.
Are we sure we want to incentivize that kind of behavior?
It's early in the morning for you guys, so you need to wake up a bit now.
Yeah, please wake me up.
All right.
The sun is still just rising.
Degenerates at 7 a.m. watching a fucking ticker go up and down. There you guys go. Maybe a stock price for you.
Those candles are like too wide for the movement that they're showing, man. You're really a degen.
They're like really zoomed in.
Look at the minute chart.
Yeah, exactly. Like, look how zoomed in they are.
You got to be proud of Tevis, though. Like his degeneracy is winding down a little bit. Like the way he's handled Rocket Lab with the options plays that he's been doing recently. It's like that's not nearly degen enough for you. Like, what's going on, man?
I know. Hey, I might let my CoreWeave shares go after today. That's going to be crazy. But
Well,
I bought them at 65 and I let them go to 100 2 weeks later. So I'll take it.
Yeah, 60 was just egregious for CoreWeave. I mean, sorry, go ahead.
it was like when Nebius was trading under 70. It was like, how is this not obvious to everybody? And
Yeah.
at that point, I cut ties with some stocks because I'm like, this one's like incredibly clear and obvious. And it, like the most astonishing thing is how quickly the market on this specific space flips directions. Like it is just violent and shocking.
Yeah. It heavily is reliant upon sentiment.
Yeah.
Yeah, for people who are asking our numbers out, when this stock chart starts going crazy, that's when we'll let you know what the numbers are.
Yeah. Once it starts flicking up and down, then we'll report on it.
That's kind of funny because Venture Global reported yesterday, and that's what I do. Like when I wake up in the morning, I don't check Iran news. I'm just like, okay, what's Venture Global doing? It's like it's very green. It's like, all right, bad Iran news. Or it's like very red. I'm like, okay, good. Things are happening well there.
We got 10 euros. I love the heavy, sleepy face, waiting to get paid. Thanks, buddy. Yeah, I woke up just for you guys. I wish I was in Europe, so this was like 1
Oh,
p.m.
same.
my time.
I'm still adjusting, man. Oh,
In Portugal, it's
4:30
midday.
today.
Yeah.
Yeah, Nate, you could have stayed an extra week.
I honestly wanted to. I wish I could have.
Any of you have covered calls expiring soon?
On Nebius,
Yeah.
I think I have
I do
like
not.
a few for like 315, but yeah, like most of the position is not covered.
Honestly, I've been waiting to see how earnings play, and then I might even look into like the 440s for January, just because they're still paying
for
insane
January.
premium.
For
Yeah.
January is crazy.
They're still paying insane premium, but it's only 4 months away, and it's a double from here. And they're still paying, I think, like $7 a contract or something ridiculous.
Probably
and
more
earnings
after
come,
today.
probably.
Yeah.
Exactly. Yeah. So I'm sort of waiting for that just to see.
Man, freaking CoreWeave. Look at this, guys. Look at this crazy price.
So when did it hit its low? What day was that?
How many days is this? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days ago, it was trading at $58, and today it's at 107.
That's insane. 9 trading days.
9 trading days.
That's absurd.
Yeah, the RSI won't update until the market opens, but it's going to be a little hot.
Yeah, a little bit.
Even Nebius though too. I mean, it hit a low of I think like what 140, 141, like also 2 weeks ago. So
Yeah. Yeah, 141.
Yeah, Wednesday or something.
It was
that's also
crazy
insane.
week, and I was in vacation. Just
Look at these insane candles.
You're on vacation, just seeing like Nebius is down 20%, Nebius is up 25%.
and I was just chilling with my cocktails, and
thought you were
everyone
drunk.
freaking out.
That's hilarious.
Wow, this is insane. I full ported the Roth at 66 on CoreWeave. Congratulations, man. Holy. You're
Well
like
played.
me, except you didn't do it at the top.
Okay, I didn't do it on top of shit.
All right, was the Rolex the top moment for you, Nate? Or
Yeah.
it used to be Tevis was like the top
Oh my
signal when he
God.
do a move, and now it's shifted to Nate,
No,
which is
can't be
lovely.
me, please. Please. Oh man.
Come on.
Yeah, get the earnings drop. Come on.
I
It
want
might
to see
be
these
something-
numbers.
Actually, guys.
Do you guys think they're going to even do like an official conversation over Vineland? Like last time, an analyst asked about it, and they said we're on track to deliver the contract to Toronto,
think-
and then they did the Bloom Energy deal like a week later.
So in the past, Andrei Korolenko has always talked about the data center build out progress, like whether they remain on track, like as part of his commentary and also to analyst questions. So I think he might have something. But
Yeah,
not
I would
expecting
hope-
him to say something.
I think it'll just be very just plain language. We've delivered the tranche, and we are on
Yeah,
schedule to
I
deliver the
think
remaining contract tranche, like something like that.
probably. Yeah.
Do we think they announced any new sites?
Of course.
Yeah, well,
Yeah.
obviously they have to.
Yeah.
Because
So
like
probably Wales.
That's
or
why
not
they're
Wales,
taking so
Estonia.
long.
like
They'll
we
announce-
know about 6 new sites, I think. We know
Uh,
Wales, Estonia, Spain. I don't even think Spain's formally announced, is it?
Spain
Spain
was
was-
announced last quarter.
Yeah, it was announced last quarter.
Last quarter.
Yeah, I think Estonia and Wales are the two bigger ones. Maybe India or South Korea as well.
No, South Korea. I don't think they're opening a data center.
Yeah, they just hired a manager for there, but
Singapore isn't announced, I don't think.
yeah.
What?
Singapore is not announced yet formally.
No, not announced yet.
Yeah, probably 2 or 3, maybe 4 data centers.
And like every quarter, they announce a new US location that no one is like counting on. I don't really expect it to happen now, but it could happen.
Yeah.
Like last quarter, they just announced the gigawatt data center like out of nowhere.
Yeah, that's true.
As long as the portfolio of location grows, like the risk of violent or a next violent happening or having a negative impact on the business becomes just smaller and smaller. So
Yeah.
I do hope they announced a couple of extra new sites.
I mean,
I
at
guess
least
we'll have
at least Wales, Estonia, and I also expect one in Paris, like another one in Paris.
Yeah.
I've been talking about that one for a long time and they never announced it, but they have like for a long time that they are hiring people to Paris. And yeah, they have a small cluster in Paris for a long time, which is like a co-location deal with Equinix. But I saw one time or two times they were like hiring for their own data center or for like a different part of Paris, because Paris is huge. So I think we could expect that. And France, as like Charles from Data One said, they have like a very good grid compared to the US. So it's a great country to open more data centers, and like they clearly already showed that they want more AI in the country. So it could be another location.
Austria too, right?
Yeah, but
Austria's
Austria, I
recommended.
think it's I got some confirmation that they are in trying to get into the country, but I think it might be too early for them to announce something.
Yeah.
Manuel, especially, but also Neil, because you guys are both over in Europe. Did Ursula's announcement? I know it wasn't like massive size, but you know that they're investing public funds now in the build out of data centers in Europe. It surprised you guys at all? Like for me as an American, it surprised me a lot that Europe would do that.
like the 30 billion,
Yeah.
which is less than CoreWeave alone.
AI first supercontinent.
I mean, they were talking about it for like maybe a year, and still the announcement said, "Okay, we're going to close this by mid 2027." So yeah, I mean, I wasn't surprised. I'm surprised it's taking so long, because when I started buying Nebius, it was already like part of the thesis. They were like, "Oh, we're investing a lot in AI. Oh, we're going to build gigawatt locations." And now they announced it in like 1 month ago or whatever. And even in this announcement, it's like, "Oh, but we will only decide who wins the contracts by mid 2027." So then the build out still has to happen, and like they're investing like 30 or 40 billion dollars for locations by what, 2030 or something like that.
Yeah.
And they're saying, "Oh, we're so ahead in AI. We want the EU to be one of the best AI like hubs in the world."
It's not even a gigawatt. They can't even afford a gigawatt. And then by the point they actually start building, it'll be like half a gigawatt.
Yeah, I mean,
How
it's
much-
just hilarious.
Now, it is kind of neat though that like even those that are kind of typically tech averse are like saying, "Hey, we got to build this," even if it's kind of comically small in the way that they've done it. How much of this do you think that Nebius can capture?
I'm not even sure if Nebius wants to capture anything, because I asked Roman, like it was a long time ago, more than a year, I think, that I interviewed Roman, and I asked him directly about that, and he was like, I mean, Europe really just wants these locations to be mostly like bare metal, and like the deals they want to do with bare metal, most of them they already did, which was with Microsoft and Meta. Maybe we get another one. I'm very confident that we get at least one more, but I don't think they want many more deals like that, because these deals alone already give them a lot of room to get funding at attractive rates. So they're always reiterating this is not the end goal. And actually, yesterday, CoreWeave's call confirmed that the demand for inference platforms is here and like booming. So they should focus more on the higher margin deals. But maybe it could happen for one location or something like that, because at the end of the day, it's like cheap funding. So yeah, it could happen, but I don't think they're very focused on that.
Get ready. I'm seeing some erratic moves starting in the chart.
Yeah, I keep refreshing, but nothing. We'll wait.
And if we could just add like the Interstellar movie here, music, it would be like so Dramatic.
Oh baby.
I don't think they've like dropped it this late.
Big announcement. We have been acquired by Google for $100 billion.
Bro,
Boom.
don't even joke about that.
I think it's probably way too late for that to happen, obviously. But like, do you think there was a point earlier in this growth curve where that would have been they would have been open to that?
No.
No way.
Arcadi really doesn't want to sell the business. Like, he was already a billionaire, and they just gave everything he had to start this business. Like, he flew from Russia. He could, like, he wasn't at Russia. He has always lived in Israel, but still, like, it. I think what drives him is to just build something very large, and like not the money itself. Because I don't know if you're aware, but when when he founded Yandex, a few years later, he also got a proposal from Google to acquire the business, and he declined. So I don't really think, and he has the majority of voting power, so it's really up to him.
Whatever happened to Yandex? Did they get sold or?
They still, like, the Russian assets are in Russia, and they still operate, but under like the government supervision.
Yeah, I guess he should have sold that one.
But yeah, I mean, they still operate. They still have like autonomous vehicles, like all the other segments, like the Uber of Russia, like everything, the entire ecosystem, I guess. But the IP that was outside of Russia, for example, Evride, like, the IP is the same, but they cannot operate outside Russia. So that's why Evride is so like so well developed, because they were established in like 2016 or something like that, and they were already doing a lot of rides in Russia. They just needed like data from other countries to like push that technology in other locations. But the technology itself was already very well developed, and other segments as well. They were really not just the Google. They were the alphabet of Russia. They had like e-commerce, like a lot of segments.
The fact that the
That's-
entire site is actually down is kind of crazy.
They're just
not down to me.
mimicking the S&P 500.
The investor hub works. The financial page does not work.
If you refresh, it works. At least to me.
It works for me too.
Yeah.
I guess
Well,
it
yeah,
needs
but
more
this-
compute.
Delay bullish or bearish?
Generally bearish, but
I mean, it might be more bearish. They've never reported on a Wednesday, I don't think so.
did Iron
Never.
already report? When does Iron report?
I think August 27th.
Oh wow,
Oh, I
that's
It's in
so
a couple weeks. Yeah.
It's
Really?
not been confirmed officially.
Ah, yeah. Oh, it's not confirmed. Okay.
Because I think that's the same day or the day before NVIDIA, or maybe the same day as NVIDIA.
Yeah, they always try to
is.
do it in the same day of whether an hyperscaler or Nvidia.
Iron does.
They try. They always do it like report.
I don't know why, but that's so on brand.
yeah,
it is.
Yeah.
You remember three months ago they released the press release of an announcement before the actual earnings report.
yeah. They
That's how bad the
tried to hide
report was.
the report for so long. I was like, let me see the numbers. I want to see those $10 million in AI cloud revenue.
Also, even just a commentary yesterday from Corey talking about going from $1 million to 100 million, and then guiding for 250 million for their imprints. Crazy bullish. And I mean, in a
the
quarter,
the
going from $1
numbers
million
are
to
out.
100 million.
Numbers are
Are
out.
they? Oh, be quiet. I don't see
Fuck, I
them.
can't open them. It's an error. But
no.
it's here like Q2 2026. Can you see it?
Oh yeah, no, I saw that a while ago, but I can't click it.
Really?
gives
It
a
just showed up
error.
in mine right now for the first time.
I saw it a while ago, and you can't click it. It just throws an error.
What the fuck?
I'm not going to believe anything anybody says until I see the stock chart moving.
Yeah, I saw this, then I looked at the screen and I was like, okay, they're not out.
Yeah, it's like the algos would have caught it.
I was just focused on my second screen.
Scam. Don't scare
Jump
me.
scare.
Sorry, guys.
So probably in 2 minutes it should be working.
Yeah, it should be live in 2, I would hope.
Because right now I'm just downloading HTML files every time I click on that button.
Yeah, I just sent it.
While
in
we're
our-
waiting, I was talking with Nate in the really early morning hours, and I'm assuming you guys have seen it. I know Tevis, we've talked as well. So Cloudflare's CEO Matthew Prince has talked about this a couple of times. Have you guys seen what he said about the non-human traffic that he's seeing on the internet, and then the forecast for 5 years out?
Who? Sorry.
Cloudflare?
Matthew Prince, CEO of Cloudflare. Yeah, they see 20% of the internet traffic. They saw, I think it was back in March or maybe it was May, that non-human traffic exceeded human traffic for the first time ever, which isn't going to go backwards. And they're projecting over the next 5 years a 1,000x increase in non-human traffic on the internet.
Wouldn't surprise me. If you are on social media, feels like 90% are fake.
Yeah, like go to my replies and
Yeah, I block about 30 bots a day, and I'm not a big account, so I can't imagine.
But yeah, if anyone's saying, "Oh yeah, inference," it's it's just gonna fall off a cliff, that they're building so much in terms of data centers, like no, if that number is anywhere close to right, we are ridiculously short on supply, like ridiculously. It's not even close.
oh, we are.
Come on, earnings.
All right, it's 30 now, so let's get
Like
it.
Nebius IR site needs some more compute, everyone.
Even the word earnings release has a typo. It's like
No.
earnings release.
Yeah, true.
Oh, there we go.
Okay.
Okay, moving a little bit. So they must be out somewhere.
No, but it's not that much. So
Yeah. and
Well,
what the
you're up
heck is
10%
this?
already, so
Yeah.
it's Tevis. Like, what the fuck is this chart, man? It moves like alpha percent, and it looks like it exploded.
It's like the screenshots on X, like, oh, what's happening with this stock? Like a huge red candle, then you look like $1. It's a $1 candle.
$1 is an entire Palantir, man.
you saw that, I guess.
Yeah, how many Palantirs are we up today?
They used to say bears sound smart and bulls make money. Now it's just bulls make money.
I mean,
Yeah.
bears make money too on Substack subscriptions, but
Yes.
Yeah, but I'm pretty sure the majority of it, 300,000, is just a free tier.
No, I mean, it's a bestseller. So majority, of course, it is free tier, but is banking millions.
Oh yeah.
I mean, he has to make money somehow because investing is
Yeah.
definitely not his thing. Man, I'm going to create every post of mine. It's like every time I talk about a stock, like this stock is up 3.5 Palantirs.
Yes.
Oh, actually, is below Citrini, so not the bestseller.
Thank you for those jewels, by the way.
So Nebius forgot.
I say, did they just get earnings? Uh-oh.
I think they're basically like, the core numbers speak for themselves. Ours
Yeah.
are going to be
Let
good.
us-
We don't even need to
Let
do
us
anything.
go up on these and we'll report tomorrow.
Maybe
I think
they're
it's-
preparing 3 other PR releases to drop at the same time, and they got to make sure those are good.
they're checking for typos.
because that earnings release is still there.
Relax.
Arkady is
worst
drinking a
case-
coffee.
Or a vodka, probably.
Yeah.
A white Russian.
Some Svedka.
Worst case scenario, 27 minutes from now, we have the earnings call. So hopefully that one starts.
Yeah, or they just announced during the call. They're like, okay, so this time there's no letter. You just listen to us.
At this point, I'm just waiting for a halt pending news.
Alt pending news down 30%.
All right,
God.
air test systems, follow-on order. Nice. Thank you, whoever said that in the comments. Received a 22 million follow-on order for AI processor wafer
here we
level
go.
burn-in systems.
This is their test systems, Roy.
Oh, okay. I was like, I thought you meant Nebius.
Oh.
Like, here we go. Yeah.
Yeah, I was looking at the other screen, then I looked.
No, sorry.
Bro, come on.
Yeah,
Yeah,
congrats.
it's
Your
like
first-
22 million sounds like nothing, but with as small as like their revenue like last year was not much more than that. So like it's extreme acceleration like across all levels of what's happening with AI, and they're one of the beneficiaries. So wow, that's awesome.
But it was today, the earnings?
Air is usually one of the first ones. They delayed it by about a month just because they wanted to be more in line with when everyone else was reporting. But no, they reported like a month ago. Today was just,
I remember
follow-on order.
seeing your posts, yeah.
Yeah.
Bro, the suspense.
Yeah, this is weird, honestly.
Let me call Roman.
Just bring him on the podcast. Have him
Subtle
read it out
flex.
loud here.
Yeah, have him read out loud. This is weird. The fact it's delayed here. Like every time I'm waking up for early morning, it's pretty much on time.
I could have slept like another hour, man.
I know. Come on. Suspense. It's killing me.
I think they're waiting for the CPI.
It's an hour from now.
Hmm. I know. I've been up forever. Too early.
Yeah, I know it's not healthy, but Monster Energy drink this morning
Oh.
for sure.
Roy,
Don't
All right, right on, man. Yeah,
my
best
monster's
flavor.
the best. Oh, easily.
don't
Coffee,
even-
man.
Yeah.
But I know in America your coffee is terrible, so drink Monster.
Yes, no, that's a fact.
It actually is
Except for
yeah.
Hawaii. Hawaii has amazing
Really?
coffee. Oh man, Kona coffee. My wife and I took a trip there a long time ago, and we went up to Haleakala Crater and biked down. And on the way, there's like a little restaurant and coffee shop there, and tried the Kona coffee. I'm not a big coffee drinker because it's terrible here mostly, and it was so good. I'm like, are you sure this is coffee? Like, man, but it's expensive, very expensive. Back then, we couldn't afford it.
I wonder what's going on. Like
Yeah, it actually is weird the fact it's delayed.
on the other side, if it's like they're panicking over like something not working, or if they're just doing this on purpose. Like
Maybe they got hacked.
sure.
I'm kidding. I'm kidding.
Point.
I'm kidding.
Can you guys check on your end the page if the Q2 is still there or if that was removed?
I mean, sometimes I refresh and it's there. Sometimes I refresh and it's not.
Yeah, I was gonna say it's like that. It's like you refresh and see for a glimpse, and then sometimes
Because
you
now
refresh
it's
and
gone.
I keep getting error 500.
Yeah, but then you hit the refresh button and it pops
That's
up. But
because
this
you're
time
in
for
Canada,
me,
man.
Yeah,
it's gone. So
the government is blocking Nebius earnings for me.
technically speaking, they should not block it because of.
Hacked by Bury.
Oh man, I could have slept 30 minutes. You kidding me?
Yeah.
Quick destroy chest just to release pressure. At 7 a.m. 7 a.m. chess.
Yeah, I don't think I would play very well right now.
They submit
Yeah.
release time to the SEC. My boss does this as a VP for IR. That's cool. I don't know that.
Yeah, I'll say one more thing on the CoreWeave stuff. There's a couple of firsts there, and so it's their first triple beat ever. They raised on guidance everything. You know, I know the market doesn't especially love CapEx right now, but you know, it is what it is across the board. And you know, there was this perspective, and people can be very short sighted and take a small sample size because CoreWeave's not been public very long, and say, oh, the stock always does this, and usually it's fall on earnings. Ooh, okay, I'll be quiet now.
Here we go.
I still don't see it.
Bro, it's again that chart.
No, it's up. It's moving.
Here we go.
No, yeah, it's moving.
But I don't see it released on the site yet. Come on.
Bloomberg Terminal gets it first, so.
Yeah.
No, it's not Truth Social. Why do I pay 100K a month, man?
We moving.
Yeah, somebody's moving it, so it's probably out, but we'll see.
I mean, it's moving in the right direction. So
Yeah. Come on. Come on, Nebius. You can do it.
Ooh, they said it's on quarter. Phil, I'm gonna look.
I don't have quarter.
It's a free app, man. You should.
Oh, is it? I don't even know.
It's on
Yeah.
quarter.
I'm also looking at X to see if anyone posted.
There's
Everyone's
literally
talking about
nothing.
their earnings were less. The earnings were less. The error.
Mm-hmm.
Not a good sign.
I don't see it actually.
No.
Let's see.
Nowhere.
I think the movement is actually not that large, but we were already up 10%. So
don't you love how somebody just has the numbers early?
Yep. Yep.
I still see earnings or less.
What is going on?
So do we get the CPI numbers before? No, I'm just kidding. Any expectations with CPI? What are you guys thinking? Are we coming in hot, hotter than expectations?
I think it meets.
Yeah, in line.
Yeah.
Yeah, I was thinking that as well, but
Oh, it's moving a little more now. Still don't see it on the site though. But now it's up to almost 14.5%. We get 220.
Moving this much without an actual report out.
I know. That's what I don't understand. Someone got it
Google deal?
earlier.
Are we getting a Google deal? Is this what's happening?
That would be crazy.
come on, guys.
For recovery.
now a lot of people are saying it's out on several different sites. So I'm gonna refresh it.
What is it?
Yeah,
know,
send the link, man.
I keep refreshing X2 to see if anyone's posting anything, but I'm not seeing anything.
I've seen
Somebody
several
would-
people say Trading View, IBKR, and I keep looking at quarter.
Somebody would have posted. Get
Yeah,
it.
like
Yeah.
even
Oh, I
on
saw
X.
someone posted on X. They beat revenue. 582
Oh.
million versus 557 estimate, but I don't know if this is just a
I've got the numbers. It is on quarter. No, this is
It is
estimate.
on
Nope.
It is on X. I have the numbers here. It's earnings per share of a
Yeah.
loss of 12 cents, revenue $582.3 million, beat by
Double
1%. Yeah, double beat. EPS up by 68, but still a loss, and revenue up 454% year over year and 46% quarter over quarter. So technically, the earnings release should be out.
And I see they raised capacity guidance for year-end 2026 to 5 gigawatts from 4 gigawatts, and reiterated
That's-
full year 2026 guidance.
Sounds like Vineland is fine.
Sounds like it, but I need to actual release.
Adjusted EBITDA was a huge bit.
Yeah,
A bit.
seems like those are official numbers. EPS was a crazy big beat. I wonder what it was. Yeah, so that 582 is official in revenue.
Yep.
Still just waiting for their shareholder letter or anything on their site.
And they should call their website Maker or whatever, because this is like they need to know there are like thousands of degens pushing F5 on this earnings date.
Seriously.
I want to know ARR. Oh, ARR at 3 billion at the end of June.
Yeah, 3 billion at the end of June
Damn.
versus 1.9 in March.
So that's 58% quarter over quarter, even faster than last quarter. I wasn't expecting this. It should be like probably a lot of renewals at higher prices.
Yeah, probably. They did raise prices by what, 25% or something in May or June.
Wait, where are you guys seeing ARR?
I'm seeing just a
I
post
saw
on
an
X,
X post.
which is
Yeah.
like a copy paste from Bloomberg, I believe.
Yeah, seems like it. Looks like of the 582 million, the AI cloud was 575. So the other parts of the business did 7 million in revenue.
Okay, I have the shareholder letter. It is on quarter. Let me send it to myself and see if I can get up with the big screen.
You have the shareholders letter?
Yeah.
Ooh, okay.
It's on the quarter.
Oh, they just
quarter app.
posted on X as well.
Okay, yeah, we can go with that one then.
No, not sure about the shareholders letter, but they posted something. ACV per megawatt,
Ooh, interesting.
annual contract value.
Here, share your screen.
We have your raising capacity guidance to 5
Yep.
gigawatts.
Neil, are we going to be the Jose of the Nebius team? I just said that 3 minutes ago.
AI cloud adjusted EBITDA margin 50%.
They did announce Estonia, and or they put it in there. Maybe I can share my screen. No one is here. Let me.
Where you guys have the letter?
Yeah, I'm actually.
I see
not
their
able
X
to pull
post here. I can
on the web,
maybe
but it is.
see if
Oh
this
yeah,
will work.
they announced.
I got the whole.
Yeah, so we have here everything we set out to do this quarter. We did. In most cases, we did more. Highlights from our Q2 results: total contract value won during quarter 4 up 4x, up the quarter up 4x. 4 landmark customer agreements averaging over $1 billion in TCV. Average annual contract value above 20 million per megawatt. That's bullish. AI cloud revenue up 514% and higher adjusted EBITDA margin. Contracted capacity guide for 2026 increased to 5 gigawatts, expecting to deploy more than 1 gigawatt per year from 2027 onward, it seems like, which is crazy bullish. But you can see here, capacity site, looks like we see Estonia is new. Is there an extra UK in there as well, it looks like? Nothing else is new here.
3 new
Yeah, it looks
sites
like-
in the UK?
No, this is
Added
added in 2026.
Okay.
Yeah.
Got it.
And then we see here's financial highlights, adjusted EBITDA margin for AI cloud, 50% this quarter. capacity guidance for year-end 2026, 5 gigawatts. That's crazy. And then active ACV per megawatt. This is the new metric, everyone. So interesting they're showing this. Looks like Q3 short-term capacity deals is over 40 million per megawatt for ACV. Interesting that they break that out now. Okay, that's all I see. I don't see anything else on their actual site. But bullish overall.
Manuel, one of your
Yeah.
guys apparently posted it in your Discord.
Oh, okay. Thanks.
Yeah, I can't pull it up on the web encoder. It's on the app, but that doesn't help me share. So
Yeah, they did reiterate 2026 full year guidance. So I'm assuming that means ARR and revenue, which we kind of assumed they wouldn't raise.
Okay, finally the letter.
Yeah, I love how people saying it's tanking. It's like, guys, it's 11%.
Yeah, exactly.
I wish all my
Payback
stocks
period?
would take like that.
For deals closed in Q2 is a year and 10 months. That's
50
crazy.
to 60% of capex self-financed by prepayments.
Manuel, you want to share your screen?
Give me some.
I can't pull it.
Maybe I can send you and you share. Where do you prefer? Like X?
Wherever.
Is that
Yeah, is it a
Okay.
link or a file?
a file?
Okay.
I can send
Here,
you on X.
I can attempt to send myself something.
I just
on X.
sent to our group. Okay, no, it's loading. Yeah.
Let me see if I can pull it up.
Payback period for deals closed in Q2, 1 year, 10 months.
Yeah, crazy. That's really bullish. Here, do you want me to share my screen? It's not very good. It's not bad actually.
Here, I got it.
Okay, cool.
Okay. Cool. Can I make this bigger? Yeah, there we go. All right, let's do it. Contract value grew 4x. Let's hide this sidebar so we can make it bigger. Payback period 1 year and 10 months for deals closed in Q2. 4 large deals. Reflection Cohere. Over $1 billion average deal size across these 4 deals. 50 to 60% of capex self-financed by prepayments. Raising capacity guidance 5 gigawatts. Q2 revenue up 454% year over year. $8 billion in cash, $2.3 billion in positive operating cash flow.
The token factory production inference workloads increased over 3x in Q2.
Yeah.
Yeah.
What?
Introduce Nebius Echo, an AI agent to help developers operate and manage workloads.
Yeah.
All right, let's see. Deal saw an average yield of more than 20 million per megawatt.
Wow.
We see opportunity in the 40 to 50 million dollars per megawatt range, and we signed our first one this week.
Wow.
Holy.
Wow.
That is insane.
That's exactly why CoreWeave also went for shorter term deals, because the premium there is much higher.
That's insane.
That is nuts.
Look at the last point there. We could sell our entire 2027 capacity on these terms today. We are deliberately not doing so because we see higher value in retaining some capacity for immediate customer needs.
We could sell our entire 2027 capacity on these terms today.
Man,
We just said that.
Wow.
This has to be the worst case of
That's gotta. He literally said.
Sorry, I was not listening.
Well,
Wow.
I already know that the Iron Bulls are going to be foam at the mouth of that term,
This is
that
insane.
language.
It's crazy. 2027 capacity. Dude, this is crazy.
Yeah, this is an extremely bullish read.
Okay, hold on. Let's keep reading. Shorter duration contracts is a new effort for customers with an acute time-bound need. I feel like this is Google, man.
Yeah, I would agree.
So similar to the language that they used, man. Maybe this is
But
typical
why?
of that behavior, but like they said, we need it as like a stopgap for Q3, and now they're introducing shorter term contracts. Man, I'm telling you, I don't know.
But then why wouldn't they announce it? Unless it's not Google just yet, but it might be Google. Because they already said one such deal has been signed in Q3, and Google said Q3 is going to be the quarter where they start looking at this. So
I don't know. We'll see if there's any PRs left. Well, for Meta, they didn't even drop a PR before earnings. They just talked about it on earnings.
No,
I
they
think-
dropped it. I think they dropped. It was in this that main deck.
Oh,
Like,
was
first
it?
slide they do. I think so. It was like 3 billion for Meta. It was like very small though.
Let's see if Google is anywhere in this deck. No.
they do say they expect over $9 billion in customer prepayments in 2026. So not too bad.
We expect. I'm not. Oh, sorry if I'm repeating now. I'm afraid of talking.
Go ahead, say it.
Dude, just
Okay,
listen.
Okay, I was going to say what you have highlighted.
Neil just said that.
This is
Yeah, this is crazy bullish commentary. I'm excited to hear them talk on the call and just repeat the same things.
I hope he gets asked about demand again. Honestly,
Yeah.
I'm gonna strangle someone.
Yeah, I hope someone asks him if AI is a bubble. I think he would
That was
just
the
say.
funniest question of all time. And that was
I
what,
think
3 quarters ago at this point?
He would just say something like, "Okay, no more questions. We're not doing an earnings call ever again. Just read the fucking letter and leave us
Roughly,
alone."
roughly 70% of deals closed included customer prepayments, an all-time high. Wow. Deal terms shortened to the expected payback period on these deals to 1 year and 10 months from her historical 2 to 3 year range. The payback is becoming increasingly more.
Prepayment has become the market standard.
By the way, maybe this was known already, but they are saying here, to date, we've delivered all capacity tranches to Microsoft under the contract, including 2 tranches over the past month.
That's good.
Yeah.
Yeah. The only thing is that this, and this is what I said in my huge post. I'm not sure if you've read it. Like, this doesn't mean Vinland is on track because they can deliver equivalent capacity. Yesterday, I actually spent some time reading the contract with Microsoft because, I mean, a lot of people say we don't have any detail about the contract, but if you look at the 20F filing that they filed in May, you have like a lot of details, like not everything, of course, because some parts are confidential, but there are a clause that says that, or at least implies that they can deliver equivalent capacity, which is what I mentioned in my post. Like, even if Vinland is not ready, unless Microsoft says, like, we don't want this equivalent capacity, which in my opinion is stupid because they would have to buy it at much larger rates than they agreed, like back in September of last year. So it's clear that they can. I'm not saying that this is not from Vinland, but I doubt, because supposedly they're just at 50 megawatts yet. They're probably delivering trenches from other locations, but I'm not sure. This is just speculation. But it confirms that they can do it, and they can, like, even if Vinland gets delays, they can just use other data centers to fulfill the contract. Because I saw a lot of FUD saying, okay, Nebius will lose this contract or whatever. But yeah, they just keep on delivering.
Guys, so this is the 4 big deals that they announced: Reflection Cohere, another US-based Neo Lab, and then a large US-based quant trading firm.
Interesting.
Are they working with Citadel? Like, what? Like, who could they be working with? That's 2 Sigma, Citadel. Who are others? What's the? What's
It's
the
not
quant-
Jane Street. Yeah.
What's the one that was
Maybe
led by-
maybe Goldman. No wonder they have a 10% stake.
Manuel, you were I think asking or writing in your preview the ATM program. So
Yeah,
they used it for the first time
Good.
Okay.
to generate $2.8 billion at an
Good, I'm
average price of $223 per share.
Okay.
222.
$23.6 per share. Yeah.
Okay.
Yeah, I'm glad they used it after a large run like that. I was hoping they were going to use at least some of it. I'd be a little worried if they didn't.
We already received our first Vera Rubins, and we are using this earlier. Yeah, okay. Did they say? Oh, new asset light path to capacity. Not. Did you already talk about it? Okay. Let's see if they.
Did you guys
Say-
talk about the fact that they expect to bring online more than 1 gigawatt of new capacity every single year, starting 2027?
Yeah, I think it was one of the first things you mentioned. I was listening on that.
Well, you're shell shocked at this point.
Anything else you guys are seeing? Trying to look.
This is very bullish, guys.
Yeah, very, very, very bullish.
So it's just a bubble, right?
Yeah, totally. It's going back up. We're at 220 right now.
Yep.
The
Oh,
capex and stuff is on the call, right?
Yeah, they always announce capex in the call.
Yeah, so that's probably going
gonna
to
be a
move.
big move.
Yeah.
Thank you, Rob. I don't know whose channel that was, either Roy's or Neil's or Nate's. Top of the morning to you, Michael Buried. Thank you, Rob.
So I because you guys were teasing me yesterday, where you're like, hey, we're not having this guy on that's not a Nebius shareholder, which of course he was a joke, but I did buy that one share,
Was it
and I
a
saw
joke?
the funniest comment.
It wasn't a joke.
Yeah.
Okay. Well, I own a share now, but the funniest comment was, "You're gonna make more money on Nebius than Burry with that one share." It's like, that's true.
That is true.
I do wonder what their comments. I mean, capex is definitely going to increase, but purely based on what we're seeing right here, I wonder what else they'll add once they say the capex number is this. We're accelerating X,
Yeah,
Y,
the
Z.
current guide is 20 to 25 billion, right?
Yeah.
Yeah, I think it'll probably raise it to 25 to 30.
You think 25 to 30?
Yeah.
I'm not sure if they're going to raise it
No, for
Don't think so?
2026.
for 2026.
They might keep it the same.
So here's the problem. It's 8 a.m. and the site still is not working for the earnings call. So I'm not sure what.
Yeah, I know.
But if some people got the letter, maybe it works for some people.
Tennis is life. Call is starting. Yeah, I can't get to the call.
Oh, okay, that's the problem.
Yeah, does someone want to link it?
The capex thing, yeah, it's going to be interesting because of the 50-60%.
Guys, can you try to get
Number.
on the call? And if you can, we can share, your audio, because I can't get on the earnings.
Yeah, I
like,
can't
IR.
either.
Yeah,
I mean, neither. Text Roman.
Seriously.
Anyone have a link in the chat?
Roy, can you check on quarter?
Oh, that's a good call. Yeah. Ooh, actually, I have it. I have the music here.
Okay, great. Let's share your screen, Roy.
Let's see, live. It's all music right now, so let me.
All right. Okay. So we have it in the background, guys. We'll just throw it up when they start talking. So Roy will let us know.
Yeah, I'll leave the music on for now. So if I'm doing this, it's because the.
Yeah, because if I put the music on, we get demonetized. Oh, hold on. Let me check that I have my ads off. I do. All right, we're at 221 right now, up 15%. What a day.
Baby. Yeah, we'll see how this reacts if they talk about CapEx at all.
Yes, the music is bullish, guys. So
It is going to be a good day for the portfolio, man. CoreWeave up 18.5%, Nebius up 15%. It's going to be a good day.
CPI in 27 minutes. It could be a good day no matter what. But yeah, that's good too. Man.
Dude, if CPI is good, oh, buddy.
Yeah, it's going to be a day if CPI is good.
But if CPI is good, then we are not getting cuts? Or how does this work these days? Good news is bad news is good news.
Yeah, I guess it could be either direction. It's a little strange right now. I like when good news is good news and bad news is bad news, and it always confuses me when it's not. I understand why, but
Yeah.
Still music, Roy?
still just music, yeah.
I think it's going to be music until they fix this site.
Maybe.
Yeah.
Right. I'm gonna put the link in the private chat just if you guys wanna.
How much is ClickHouse worth for Nebius? So they have this on their document. Let me pull it up right here.
It's currently valued at $15 billion. They have a 25% stake.
All right, well,
So-
there you go.
$3.75 billion. But ClickHouse is going to be worth
A lot more.
over $100 billion in the long term.
I would agree.
I'm not sure if you mentioned this. I mean, I was here when we talked about the $40 to $50 million per megawatt, but they mentioned that for the first time ever, they did an auction on these capacity deals. So it was like, okay, we have this cluster for 3 months or 6 months or whatever. Who gives us more? Which is crazy.
That is
And
crazy. Yeah.
Like, if it's a trend, what maybe can we say about the Vera Rubin capacity? Because we signed our first one this week. Maybe this is about this could be for Vera Rubins already, but like, if the demand continues like this, imagine if they get to like $60 million per megawatt or something like that.
Dude. Look at Nebius's website right now for me. I refreshed like 3 times. This is what it looks like.
They didn't leave enough
I'm not
for people
clicking
to
away
run
from
the
the
website.
call.
Okay.
If I click away from the call, I might not get back in. So.
Yeah, don't do that. We need one backup. You need to be on the call.
Since I own the most shares, it makes sense. So
It's exactly.
So for
Yeah,
context, people, by the way, go ahead.
One share of Nebius, you're like the intern. You're like, Roy, pull up the call.
Looks like they still have half of their ATM program to go. They sold 12.7. I know we knew that, but then they have 12.3 remaining under the program to still sell. So probably get another 3 to 4 billion out of it if they sell in the high 200s.
Yeah, so we're still just waiting for the call here, guys. It's still just the music. So we'll pull it up the moment the call starts.
Don't you people worry.
Yeah, exactly.
now at 15%
It'll
for
be good.
Nebius.
Yep, 222. 300 end of week. I wish.
Dude,
Music stopped.
honestly, if they dropped a deal,
Yes.
we would be like at 250.
Okay, it's starting. It's starting.
All right.
Perfect. Thank you. We don't hear it.
Thanks everybody for being here. Call is starting, Roy. We can't hear it.
Oh, you can't hear it. Let me reshare. Okay, go ahead.
Over to Gilly Naftalovich, Head of Investor Relations, to start the call.
Hi, everyone, and welcome to Nebius' second quarter 2026 earnings conference call. Joining us on the call today, we have our CEO, Arkady, our CFO, Dado, and the broader Nebius management team. Before we get started, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business operations and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Form 20-F for a list of our risk factors. We undertake no obligation to update any forward-looking statements. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release. All earnings-related documents are distributed and available to the public through our investor relations website, which can be found at nebius.com. And now, I'd like to turn the call over to Arkady.
Thanks, Gili, and welcome everyone to our call today. I would like to provide our investors with a better understanding of our business model. We had an excellent quarter. The demand for what we're building continues to be enormous, and we have the right business model to capture it. We build capacity ahead of contracts and use our multi-tenant cloud and our software stack to support our customers, AI natives, agentic AI leaders, new labs, and some of the most sophisticated enterprises. Our strategy is working. We choose when to sell, to whom we sell, and on what terms, and how we finance everything. This flexibility allows us to meet the needs of independent AI builders and to support an open, diverse, and competitive market. We address customer needs with 3 types of deals. Each has a different duration, pricing, and role in our business. First, for our core AI cloud business, we have midterm contracts of 1 to 3 years with the world's most ambitious AI companies. This quarter alone, we closed 4 landmark deals with Reflection, Cohere, as well as with a scale US new lab and a large US-based quant trading firm. These deals were for an average of more than $1 billion each. They represent a yield of $20 to $25 million per megawatt, with upfront payments that cover 50-60% of the associated capex. But most importantly, we could sell today our entire 2027 capacity on these terms if we wanted to. But we're not doing this. We see that we can achieve higher value by retaining some capacity to serve shorter term and immediate client needs. And here we come to the second type of deal. This is shorter duration capacity, typically for up to 6 months, for customers with an immediate time-bounded needs with high value requirements. For this, they are ready to pay a significant premium. We're negotiating deals for $40 to $50 million per megawatt range, and sometimes above under this model. One of such deals has been signed just recently, by the way. Both deal terms I just described are all coming online later this year, so they will not have a material effect on our 2026 revenue guidance. However, they will definitely affect our 2027 revenue and beyond. The third deal type, as we noted many times in the past, is our long-term contracts with investment-grade customers. They serve an important purpose. They help us to finance our build-out faster and more efficiently. The secured debt facility we raised in July was on the back of one of these deals. And with $40 billion in contracted backlog, we will do more of this. We're constantly building, innovating, and developing our software stack, talking agentic offerings and services. But today, I would like to focus on different types of innovations from this quarter. We launched our first capacity auction. It was very successful and cleared at the highest price we have seen for the Blackwell generation of chips, 15% above the highest price we ever charged before. This gives us a strong signal on the value of this capacity in the market in real time. This was an innovation of sorts on the go-to-market side. On the capacity side, we're also innovating in how we build. For example, Our asset-light partnership model, which we introduced this quarter, provides an additional way for us to scale. This model addresses the two constraints of our industry, which is capital and capacity. Partners finance, build, and operate the facilities, whereas Nebius brings the full stack platform and the demand. We provide value-added services that sit on top of our partners' infrastructure, which delivers us with high margin revenue and requires minimum balance sheet capital. This model has the potential to unlock new capacity for us in 2027 and beyond. We continue to build our future capacity pipeline through our own and collocated sites, and today raise our year-end contracted power target to 5 gigawatts. Our future capacity pipeline effectively makes Nebius one of just a few companies in the world able to build more than 1 gigawatt of new capacity a year. And we plan to do so in 2027. So to close, everything we set out to do this quarter, we have done. And in most cases, we have done more. Landmark deals in our core market on better terms than we expected. Capacity rising to meet demand, and a platform meeting the needs of the industry. We are not just reporting a strong quarter behind us. It's much more than that. We see the demand, we see the supply, we see deal terms for 2027 and beyond. Even our future capacity plans, including for 27, we cannot be more excited about the future. And on this optimistic note, let me hand it over to Dado.
Thank you, Arkady. We entered the second half of the year with strong momentum as we successfully executed our strategy in the first half. We again delivered triple-digit revenue and ARR growth in Q2, even before most of our 2026 capacity comes online in the second half of the year. This was coupled with a significant expansion in adjusted EBITDA margin while strengthening our funding position, which was supported by substantial customer prepayment terms and expanded sources of our capital. This start is strong and keeps us on track to achieve both our strategic and financial objectives for the year. I will touch on the progress we achieved in Q2, share details on our financial results, and conclude with our annual guidance, which we are reaffirming today. Please note that all comparisons are year-over-year, unless noted otherwise. Let's start with revenue and ARR. In Q2, we grew group revenue by 454% to $582 million, up 46% from last quarter. Our Nebius AI business grew even faster, increasing 514% from last year to $575 million and generating 98% of group revenue. Annualized run rate revenue reached $3 billion at the end of June, up 598% and increased 56% from $1.9 billion at the end of March. Revenue was driven by capacity added in Q1, higher utilization, and high margin revenue from our new asset-light business model, Token Factory, and our recent acquisitions. Higher utilization was driven by improvements in our underlying infrastructure efficiency. And once again, we sold out of capacity because as fast as we bring capacity online, we can sell it. Turning to profitability, group adjusted EBITDA was $236 million, compared to a loss of $21 million a year ago, and $129.5 million last quarter. Group adjusted EBITDA margin was 41%, up from 32% in Q1. Our Nebius AI business generated adjusted EBITDA of $286 million at a margin of 50%. The delta between group and the Nebius AI business margin reflects our investments in AV Ride and Triple10. Both are still early-stage companies, and we expect the Nebius AI business to continue to represent the significant majority of group adjusted EBITDA. The increase in profitability is a result of higher revenue and the early contribution of our asset-light model, as well as Token Factory and our recent acquisitions. Even as we continue to invest in growth, we see a clear path to capturing more margin, not just this year, but in 2027 and well beyond. We have visibility into pricing and expect capacity coming online from our own data center to begin improving margins in the second half of next year. Now, turning to our balance sheet. Prepayments from our customers reached an all-time high in the quarter. Roughly 70% of the deals we closed in Q2 included an upfront prepayment. In total, customers' prepayments will bring in more than $9 billion of upfront funding this year, directly reducing the capital we need from debt and equity. Operating cash flow was $2.3 billion in the quarter, and we ended the period with $8 billion in cash and cash equivalents. In Q2, we also tapped our at-the-market equity program. We issued 12.7 million Class A shares at a weighted average price of $224 per share, generating gross proceeds of approximately $2.8 billion. As of June 30th, 12.3 million shares remained available under the program. We view the ATM as a flexible funding tool, and it remains an option in our arsenal rather than a commitment. In July, we announced our first asset-backed debt facility for $775 million. This facility is secured against contracted cash flows and priced at a modest spread over benchmark rates. Its rate today is equivalent to a mid-single-digit percentage. And we have more than $40 billion of additional customer commitments at similar terms based on the strategic deals we have entered into with investment-grade companies. We will continue to diversify our funding sources while maintaining a balanced mix of debt and equity. We are progressing on additional asset-backed financing and continue to evaluate corporate-level debt and additional financing instruments. Turning next to CapEx. In Q2, capital expenditures were approximately $5.7 billion, driven primarily by purchases of GPUs, GPU-related hardware, and by our data center expansion. Our capital investments to date position us to achieve our capacity plans for the year. Let me turn to outlook. The solid progress we have achieved in the first half of the year bolsters our confidence in our outlook for 2026. As such, we are reaffirming our full year 2026 guidance across all metrics. We continue to expect annualized run rate revenue of $7 to $9 billion, group revenue of between $3 and $3.4 billion, group adjusted EBITDA margin of approximately 40%, and capital expenditures of $20 to $25 billion. And we remain confident in our ability to accelerate capacity deployment in the second half of the year and expect capacity deployed late in Q2 to begin contributing to revenue in Q3. As Arkady said, we are now building capacity for 2027 demand, supported by customer commitments already in place and providing near-term visibility into the revenue associated with this investment. And finally, we are actively pursuing opportunities to generate incremental high-margin revenue from our new models, our auction, our short-term capacity deals, as well as our asset-light business. In summary, our strong Q2 performance reflects our rigorous execution to scale the business profitably. We deliver solid revenue growth, we increase profitability, we opened a new capital-efficient path to capacity, and we expanded our funding alternatives. As we look ahead, we will continue to scale rapidly to capture the opportunity in front of us while remaining balanced, disciplined, and focused on delivering long-term value for our shareholders. And with that, I will turn the call over to Gilly for Q&A.
If you would like to ask a question, please click the Ask a Question tab in the top right of the live stream player. Then just type in your question and click Submit. I'll now hand back to the Nebius management team for the Q&A session.
Thank you, operator, and thank you, Dado. Our first question comes in from Ryan Lomtzis from Morgan Stanley. With the Vineland, New Jersey data center site hearing adjourning without a vote, can we just get an update on the site? How is capacity tracking? And with no vote taking place yet, how could this impact plans to ramp this site? Tom, can you help us answer that?
Yeah, sure. Happy to. I'll start by touching on the public hearing side of things. And I guess maybe just one quick sort of general comment. Obviously, there's a broader set of issues and debate around data centers in the US. These are things that we track very closely, and we've generally found that we have an effective approach to moving into new regions, which is based on coming in early, being very open, transparent about what we're doing, engaging with the community, and actually answering the questions that come up. And we find that this is an effective approach, and the same approach that we've been applying in New Jersey around Vineland. So specifically around Vineland, so what overall we're on track with our delivery, and I'll let Andre speak a bit more detail about that from the kind of the construction and build out side. But with respect to the public hearing, so what's happening right now? Data One is seeking final approval for the amendment to their originally approved site layout plan. And the amendment to the site layout plan was a result of the decision to switch from the project's power source to Bloom. I'd say generally that the switch to Bloom, we think significantly enhances the project, including from a community perspective. It's an on-site power solution delivering reliable power quietly and ultra low emissions. I'd also say these types of hearings, these are all part of the normal process, and we very much build them into our schedule with these steps in mind. And so with respects to this hearing on the layout plan, so we're confident that the layout complies with all the applicable local, state, and federal laws and regulations. And we're optimistic that once the public has been heard, this will move quickly to approval. And we'll definitely keep you updated as we have more news. But with that, maybe I can ask Andre to add a couple of points just from the build out side.
Yeah, sure, Tom. Hello, everyone. Well, we delivered all the tranches that we were required to deliver under the contract up to date. And we have all the reasons to believe that we will continue to deliver the remaining tranches as required by the contract. And probably to add color, construction of the building itself finished earlier this summer, and engineering fit out is progressing fairly well. And Bloom fuel cells deployment should be fast, and overall the switch to Bloom has been a valuable and a good pivot for the project, we believe, and with no significant impact expected on the project timeline. Tom?
Okay, thank you. Our next question is, we're getting a lot of questions actually on this from the portal. Mark, maybe you can help us talk through our landmark deal announcements. Can you characterize how those processes ran and why these customers chose Nebius?
Certainly. Thank you for the question. And we are very excited about these wins. Closing billion-dollar deals in our core AI cloud business is an important milestone in our go-to-market journey. It confirms our fundamental belief that we can build a diversified customer base at scale. All four were competitive wins following a similar pattern. Our scale, performance, and reliability were the differentiators. Also, each customer sees us as a long-term partner that they can grow with. In all cases, the customer already had an existing supplier, in some cases, hyperscaler, and they were looking to partner and expand with next-generation capacity and a platform. As a matter of fact, let me tell you about one of these wins. They were introduced to us by a key strategic partner late in Q1. The customer was looking for a large-scale, contiguous GB300 cluster, also flexibility for future expansion, as well as strong technical support and a long-term strategic partnership. When we closed with them in May, they cited our responsiveness, our transparency, the white glove support they received, and our ability to provide their current U.S. deployment needs as well as future sovereign expansion as key differentiators. We are now in discussions with them for more capacity, and they're exploring our inference solution, Token Factory. All of these wins were earned wins, not inbound walk-ins. We had multiple engagement cycles before closing. The customers validated our technology through hands-on POCs. One of them told us it was quite literally the best POC they have ever had. We are already in discussions with several of them on post-training and inference to support their revenue plans and growth, and with all of them on significant additional capacity and next-generation chips, including Vera Rubins. And yes, we have more deals just like them. Our pipeline generation stepped up again in Q2 and includes multiple opportunities over $1 billion, spanning AI natives, neo labs, and enterprises.
Thank you, Mark. The next question we have comes from Alex Duval at Goldman Sachs. Andre, a large share of our deals we signed are tied to capacity arriving in late 2026 and through 2027. Given the sentiment around gigawatt scale data center build out, what gives you the confidence in our capacity ramp, and can you provide an update on our development timeline?
Thank you, Gita. Well, we made a very good progress this year with our contracted power, and we exceeding our end of the year projections much earlier for 2026, and we will be raising, or we are raising actually the contracted power to 5 gigawatt now by the end of 2026. Almost all of that power will come online over the next 3, maybe to 3.5 years out of the contracted power, that number that we mentioned. And we are not stopping actually. This is being achieved by different region expansion and the mix of grid power and behind the meter power. We also working on secured to have the access to the hundreds of megawatts of the generation behind the meter power already as of today. We're also excited about our partnership with Bloom, which allows us to unlock and expedite a lot of our sites. And also I wanted to mention that the vast majority of our contracts is the cloud contracts, where we have the flexibility where within the region we can deliver it, reducing the dependency on any one location. So over provisioning the sites, over provisioning the capacity is our highest priority for today, and I believe will be the case for tomorrow as well. And general approach is we deploy as much capacity as we can, and we try to build in advance as much as we can as well.
Thank you, Andre. Arkady, we've had a number of questions come in on our strategy. The market is moving quickly. You mentioned prices are increasing and you plan to expand capacity by more than 1 gigawatt per year. You also announced a lot of new initiatives this quarter. Help us make sense of how these fit into our broader long-term strategy.
Yes, you're right. The market is evolving rapidly, actually even more rapidly than everybody expected. And the good thing about our business model and our platform as well is that they both allow us to evolve rapidly with the market. I will give you a couple of examples from just this quarter. First, as we all see, prices are changing fast, they're growing. And our model was built to build capacity in advance, but not to pre-sell it in advance. And that is why we have this available capacity now that can allow us to allocate it to shorter term and much higher margin contracts. The second example would be, as I mentioned, we also launched our first auction this quarter. This is the auction for the midterm contract. Why we were able to do so? Because again, we had free unallocated capacity and we had our multi-tenant platform. And we're just realizing the benefits from it. And we have similar flexibility on the capacity front. And again, it's a strategic advantage of the platform we have. The fact that our platform is universal and able to work on any third-party capacity gives us an opportunity to grow even faster. And this is what is our asset-light model is all about. So we see there are multiple ways to monetize the universality of our full stack platform on both software and hardware part of it. And the way we think about all of this is simple. This market is going to continue to move quickly and to grow quickly. And we will be sure that our business model and platform will stay flexible to allow us to capitalize, to use all this growth.
Thanks, Arkady. Our next question comes from Arsenij Matovic from Wolf Research and was emphasized by many others from our portal. Relates to our new 775 million asset-backed financing. Debt markets have been volatile and all-in costs have generally moved higher. Are you still comfortable leaning on debt from here, or should we expect greater use of equity through the ATM or perhaps a convertible? Dado?
Thank you, Arsenij. Well, our approach is not about making a call on the markets. Really, our approach is to match the right financing instrument with the right assets, while remaining disciplined about three things: our cost of capital, minimizing shareholder dilution, and maintaining a strong and healthy balance sheet. Our first sources of capital remain customer prepayments and operating cash flow. We expect more than 9 billion of upfront customer prepayments in 2026. Clearly, this directly reduces the amount of external financing we need as we continue to scale. Beyond that, asset-backed financing is an important part of our strategy. The 775 million facility we completed in July, priced as SOFR plus 250 basis points, was backed by deployed GPUs infrastructure and contracted cash flows from an investment-grade customer. It demonstrated that even in a more volatile market, there is a strong demand to finance these contracted cash flows on attractive terms. And look, with more than 40 billion of committed backlog, we believe this is a highly scalable and repeatable financing model. Obviously, we expect to continue accessing this market as we deploy additional capacity. And also beyond asset-backed financing, we have significant flexibility. We currently have almost no corporate level debt, so that represents an additional source of capital that we can evaluate as the business scales. Equity and equity-linked financing, such as the ATM or potentially convertibles, offer additional sources of funding. And we evaluate those alongside all of our other funding options as we source of capital. We are actively considering further equity-linked and asset-backed financing options and continue to evaluate corporate-level debt and other financing alternatives. So overall, we remain very comfortable with our funding position. So we do have multiple sources of capital available to us, and we will continue to optimize across them with a focus on cost of capital, limiting dilution, and maintaining a disciplined balance sheet.
Thank you, Dado. Our next question comes from Tyler Radke with Citi. And Mark, this one is for you. How do you think about the mix of allocating 2027 capacity between short-dated capacity versus multi-year deals? Is there a threshold of ACV per megawatt you are waiting for on the longer-dated deals to sign into those?
Thank you, Tyler. Before I dive in, let me just make sure and clarify the deals with a little bit more nuance, the type of deals that we're doing with a little bit more nuance. Our medium term or midterm contract durations are for the most part, are AI cloud customer agreements. And that's our core of our business. And that's where we're locking in strong unit economics with some of the world's most ambitious AI companies. And then separately, as you called out, we have the shorter term opportunities and durations. And these are premium deals. And that includes, as an example, the auction that we described today, as well as the ability to capture sort of the shorter term scale contracts that we mentioned. In practice, what we strive to do is to optimize across customer type, price, payment structure, duration, and deal size, rather than strictly looking at a single variable or a compiled metric. Our current emphasis is taking care of existing customers, followed by new logos, and then terms. Terms in order of priority, including price, then upfront prepayment, then duration. So a bit wider than purely ACV per megawatt. We have also, at the same time, tactically shortened how far in advance we sell capacity. So in effect, selling closer to deployment, which at the end of the day has improved the pricing that we can derive while preserving our agility. We're deliberately allocating a portion of capacity for short-term and immediate needs, because that is where we currently see the highest potential for combined realized value. To summarize, as we've deployed capacity looking towards the latter half of this year and into next year, we will allocate across both medium and short-term deals using this with our customer and terms lens that I mentioned earlier.
Thank you, Mark. This next question comes from James Kisner at Water Tower. XAI has begun selling compute at premium prices. What does that say about market pricing for AI capacity? And are you seeing similar strength on new contracts and renewals? What does this mean for Nebius?
Probably I will take it. It's Arkady. Definitely, we don't see any change here for Nebius or our plans to change. We are playing on basically on the same market as the three big hyperscale clouds. The whole AI cloud market is growing massively, from hundreds of billions of dollars per year to probably $1 trillion, some people say more. And there is no doubt that the main existing players will continue to grow with the market, right? But there is also definitely there is an opening for the new entrants, for the independent players like us. And yes, we want to build a gigawatt capacity per year. Yes, there is not so many companies doing that. The numbers look great, big, but the market as a whole is growing by tens of gigawatts per year. It's like multiple of order larger. And the hyperscalers are those who build a lot of this, but even them, they definitely cannot build all of it. And somebody needs to help them to build. And that's not us. Because somebody needs to build the rest of the market, and that will be us. This is our part. And this is where we see the biggest opportunity for us. So coming back to the question, new players coming to the market don't change the market for us. They actually just, I think, validate the market.
Thank you, Arkady. Our next question is from Rob Oliver from Baird. Is your strong positioning in open weight driving increased inference among clients? Roman, this one's for you.
Yeah, thank you, Gilly, thank you for the question. First of all, we believe that customers, businesses and even society benefit from competition and diversity. We were committed to an open AI ecosystem from the beginning of the company and providing open infrastructure without locking. So customers get flexibility, control over their data and models, freedom in how they deploy. And at scale, the economics matter. Companies at the frontier of adoption of AI adoption are seeing the cost of token consumption and asking, can AI not only solve the task, but do so with economics that allow it to scale? And another important question is how to extract value from specialized knowledge and data held within enterprises and where there are people, and convert it into better performing AI systems. Everybody is saying that data is the mode and maybe the only mode. All of this is driving companies towards more specialized models. Open source models are valuable not simply because they are available, but because they can be tuned, trained, and eventually optimized for a particular use case of a particular customer, particular business. What has changed is that the quality of open models is improving rapidly. At the same time, the industry is moving toward the flexibility and control that we built from the start. So Token Factory provides day zero support for frontier open models, and the velocity is just crazy. If you look just in the last 4 weeks, we got Nematron Ultra, GLM 5.2, Kimi K3, new DeepSeek Flash, Minimax 3. Today, new Nematron Lighting was released. But availability alone is not enough. We are building the capabilities to serve these models without compromising quality, cost, and performance. Let's take GLM 5.2 as an example. Some people called the moment when this model was released the DeepSeek Moment 2. Our implementation achieved a 100% quality score and leading performance validated by independent benchmarking and artificial analysis. That position us in a great spot to grow and drive the demand to open source models that we see at the market now.
Thank you, Roma. A follow-up from Rob. Can you provide any early color on the asset-light offering, early customer engagement, and how the economics look for you versus your core? Arkady, do you want to take this one?
Yeah. Yes, first of all, we're growing globally, but we're still a startup, and we should be very mindful about where we invest our own capital. We can go into all markets instantly and simultaneously. That's why we're very open to working with partners, and our platform allows us to do so. After we announced our asset-light model, we have had dozens of inquiries from potential partners who have significant capacity and enough capital, but don't know how to build and how to sell it. With GPU increasingly becoming an investable asset, look at the recent news, we expect more and more companies who will want to come to the market, but will need our help to deliver this capacity to customers. By having the right tech platform and access to the market, we can help them. So this is actually exactly what we can easily offer to them, and that's why this asset-light model. The model is still in very early stage, but we are very much encouraged by early signs and think that it has a great potential.
Thank you, Arkady. Our next question is from Ryan Launtis from Morgan Stanley. Dado, you've said you could sell your entire 2027 capacity today. How should investors frame 2027 across capacity, pricing, and revenue? And when will you formalize an outlook?
Thank you, Ryan. This is probably one of the more interesting questions for investors on this call. You should expect the deals we closed in this quarter with more than 20 million per megawatt deals and less than 2-year payback period to start coming online from late Q4 and onwards. This can serve as the baseline for pricing early next year, as we could have sold out our planned capacity already today. However, we are choosing not to do so, reflecting our confidence with respect to future pricing dynamics. But also capacity, obviously, is a major part of this equation. And we are going to deploy significantly more capacity in 2027 than what we have already done in 26 and what we are going to do still in 26. The dynamics we expect across both capacity and pricing make us extremely excited about 2027, although we will provide a formal guidance later this year. And don't forget that in addition, we expect our asset-light model, along with high-value services such as agentic and inference solutions, to contribute an increasing share of revenue while supporting even higher margins.
Thank you, Dado. Our next question is from Brett Knockbach at Cantor. Do we still expect to end the year with 800 megawatt to 1 gigawatt? I see Andre, do you want to take that for us?
Yeah, absolutely. Yes, we still expect to meet this guidance from 800 megawatts to 1 gigawatt of connected power this year. And also there was a part about the Vineland included in 2027. No, the Vineland is the part of 2026 capacity and connected power. What I wanted to say is that connected power represents the data centers, and there are a few steps coming from the data centers to the revenues. You have to commission the data center, build the network, build the clusters, deploy the platform, then onboarding the customers, and then the revenue generation starts. So that takes a few months, and depending also on the generation change of the GPUs probably. And so there's a gap between the connected power and the revenues coming. And in terms of our guidance from 800 to 1 gigawatt, yes, that's more or less, that's true about the connected, but I would think that about being active throughout the first half of 2027.
Thank you, Andre. We also have a question from BNP Paribas, from Stefan Slowinski, specifically around our 40 million per megawatt monetization in Q3. Is this reflective of initial pricing from selling Vera Rubin capacity? Andre, do you want to talk about the ramp of Vera Rubin capacity?
Yeah, absolutely. So we have Vera Rubins in our labs for quite a while already, and we already are getting the results, the expected results with the Vera Rubins. So first of all, I wanted to mention that step between the Grace Blackwells and Vera Rubins is somewhat easier from the technical perspective than step from the previous generations to the Grace Blackwells. And we expect to start deploying the Vera Rubins late this year or early next year and continue throughout the full next year.
Yeah, and to the first part of that question, and we're getting a lot of questions from the portal on our new go-to-market motions. So Mark, I think that will be a good topic for you. We piloted both a capacity auction and short-term scaled training deals since quarter end. Walk us through the strategy behind these motions, what they told you about pricing, and are they still take or pay?
Thank you, Gili. by now, I think we can all agree that the market is incredibly dynamic and moving rapidly. And we're constantly looking for ways to discern signal and understanding in order to deliver a better and more complete understanding of our take or pay business. Now, we launch these initiatives to first and foremost learn and validate while building our customer relationships in a disciplined way. What we described earlier as short-term scale training capacity deals are specifically customers that are looking for dedicated scale, in this case, GB300 clusters, for 3 to 6 month engagements at a premium. These customers have specific requirements like time-boxed, large-scale training runs ahead of a model release or reinforcement learning post-training sprints. In the model world, we hear over and over again, weeks matter, and so does access to reliable, performant AI compute. These customers are willing to pay for speed and certainty for a controlled span of time. Now, on the other hand, the auction is all about clear price discovery. In today's environment, the price in the market can change literally as we move through a sales cycle. The challenge is to get a solid gauge on the fair value of our offering at any moment in time. The standard reference points, competitor pricing, analyst opinions, and even prediction markets are all over the place. In a market where we have several buyers for every GPU, we let the market tell us directly. The auction result was a price 15% higher than we've ever seen before, and 20% higher than our pipeline for Blackwells. Also, the winning bidder is thrilled with the experience. They called out specifically the combination of validated pricing and the certainty of access to the compute they need. Also, they told us they plan to participate in future rounds. So what you should take away is that these are both customer value confirming and independently lucrative. We are using a small portion of our overall capacity to drive price discovery and value validating initiatives. And these will help us to evaluate our capacity and the market as we move into 27. They will both have a broad impact across our pricing, packaging strategy, deal negotiations, and they inherently have faster close to deployment cycles.
Thank you, Mark. We're getting a lot of questions around the deployment of more than 1 gigawatt of new capacity starting in 2027. Dado, can you talk us through how we're planning on funding this CapEx at scale, and how do we prioritize our funding sources?
Thanks, Dado.
Absolutely. So what is important to understand is actually that we have multiple pools of capital available to fund our growth, and we are very comfortable with our ability to finance the capacity we plan to deploy in 2027 and actually beyond. Clearly, the first source is operating cash flow. We are already generating positive operating cash flow and expect this to increase meaningfully as the business scales. Then we have our customer prepayments. The terms we secured in Q2 cover approximately 50 to 60% of associated CapEx. But going forward, one of our objectives is to increase this coverage even further. Third, our long-term contracts with investment-grade customers give us a very strong base to raise asset-backed financing on attractive terms. We currently have approximately 40 billion of committed backlog that we can borrow against, and we began utilizing this source of financing already in Q2. But beyond that, we have additional flexibility through corporate level debt and equity-like financing, which we have not yet meaningfully tapped. We will continue to balance these sources in a disciplined way to maintain a strong balance sheet as we scale. But we also see financing opportunities that are additional to those emerging around GPUs as an asset class. We have seen increasingly activity in an interest in financing GPUs as standalone assets, and we are strong believers in the potential of this market. Over time, this could provide us with another attractive source of funding. Overall, we are really very comfortable with our balance sheet today and confident in our ability to finance our growth in 2027 and beyond through this diversified funding strategy while maintaining financial discipline.
Thank you, Dado. The next question is from one of our investors on the portal. Roma, what are we seeing in the market around token maxing, and is that having an impact on usage or adoption of Token Factory into Vili?
Yeah, thank you for the question. First of all, I wanted to start with a reminder about our first inflection event that we held in June. And probably that was the first time when we publicly described our product strategy, where we built layer by layer the AI cloud to meet developers where they need us, from scaled bare metal infrastructure to the agentic layers. And the obvious trend is that AI systems are moving into the production. Coding is the most visible example, but this is not limited to coding. We see long horizon agentic workflows in financial services, such as use cases at Revolut and MasterCard, e-commerce applications, improving the customer experience and process, and Shopify, and many more. For example, Sword Health in healthcare, or Hixfield in marketing automation, and other verticals. We also, as always, customer zero for ourselves. Echo, our own infrastructure agent, shipped at the last cloud release, runs an open source model served by Token Factory. The challenge that we see for the customers is scaling complex systems that combine multiple models, inference engines, and tools. We help solve this with our suite of services, including Token Factory for reliable high-performance inference and post-training, and Tavidi for grounding, particularly as companies move from closed ecosystems with built-in search towards more open ecosystems. Eigen AI and Clarify teams are fully integrated into Token Factory effort and already shipping inside our roadmap. We see day zero support for the major open model launches, measurable performance optimization post-launch, and independent benchmarks, as I said earlier, continuing to rank us among the leading inference platforms. Q2 was also Tavili's first full quarter within Nebius. Its developer community grew to more than 2.5 million developers from 1 million in February. And it launched keyless paper search built for autonomous agent consumption. And it achieved the set of certification for enterprise deployments. We also see more customers post-train their own models, creating additional demand for inference and grounding throughout the development cycle, not only in production. Reinforcement learning rollouts, evaluations, synthetic data generations, and grounded training workflows all require significant inference capacity and reliable access to external information. These trends validate our strategy of building a vertically integrated platform that delivers attractive total cost of ownership and supports diversified workloads. We want to serve customers across the full AI lifecycle, from training and post-training to inference and grounding. This is where our infrastructure and software come together as a strong offering, and we are only getting started. New workloads are bringing new requirements, to the physical infrastructure as well. And again, we can address them as we build the full stack. And not only bringing new generations of GPUs that Andre mentioned, agentic orchestration, tool calling, and data preparations are CPU heavy. So we are adding ARM and CPU deployments alongside the GPU fleet.
Thank you. And that concludes our earnings call for today.
This concludes today's call. Thank you everyone for joining. You may now disconnect.
Oh, they were just going to let it die in silence at the end. I'm like, oh, no mic drop moment. Very good, though. What do you guys think?
Yeah, great.
You sound excited.
No,
It's good, yeah.
I really like the comments as well on the asset light model, where you were saying like, hey, we have a lot of potential partners with capacity, but they don't know what to do with it. So I think that's going to be ramping up to be a bigger business line very, very quickly, like before we know it.
Yep.
Obviously, the 40 to 50 million, I think, is like the headline for megawatt for shorter term deals. And he said that we already have we just signed a recent deal at that price point as well, which is interesting.
I have a feeling it's got to be Google.
It's
got to be Google. Q2, they said they're going to hurt margins. Like, no wonder it hurts your margins when you're paying 40 to 50 million per megawatt. Like, yeah, I think it's Google. I thought it was really, really bullish call. Obviously, they gave some details of Vineland and said everything's on track still. They don't expect the change to Bloom Energy to delay their schedule delivery tranches. So that was pretty bullish.
But those contracts between 40 to 50 million dollars per megawatt are for Vera Rubins, obviously. So they will only impact the numbers starting in 2027. Yep. So I'm not sure if it's Google. I would actually not bet on that, but maybe. It could
Did I hear the connected power for this year is still the same, right? 800 to 1 gigawatt.
That's what I heard.
Did I understand that for mid-2027, it's expected to be the active power?
I think so. I think that's what I heard too. But
I'm not
like
sure
part of the
what
question got cut off a little bit.
They said that they basically said that clarify that connected power is not active power. So we shouldn't close the year with that range in terms of active power, but that's all of that connected power will be active during 2027.
Yes, they said. Yeah, so the 800 to 1 gigawatts, that's more true about the connected power for this year, but that's what he says here. But I would think that about being active in throughout the first half of 2027. Yeah. Okay. It seems like 2027 is just going to be a crazy year for them.
Yeah, 2027 is going to be the guidance. I don't even, because they're 20 million per megawatt now they're getting for their deals, an average yield of 20 million per megawatt. Like, it's going to be nuts.
They kept capex the same, right? 2025. They didn't. They just
as I expected. And actually, if they say we're going to close the first half of 2027 with between 800 megawatts and 1 gigawatt of active power, if we do the math, like maybe the Microsoft and the Meta contracts are like maybe 500 megawatts, not sure. Let's put it at 12-13 million dollars per megawatt. Then the other capacity, I would say at least maybe 20 to 25, maybe even more. I'm trying to be a bit conservative because of the Vera Rubin deals. That would mean ending the first half of 2027 with at least like 16-17 billion dollars in ARR, something like that.
Yeah. And this lines up to what Mark said when he said tens of billions of revenue or tens of billions of revenue as a conversation for the next 2027. He did like an interview. saying they expect tens of billions, which he probably, I'm assuming is ARR, but if they keep these rates up, like, yeah, we could be seeing 20 billion of ARR by mid next year.
So yeah, they should close the year at well above $20 billion in ARR.
Yeah, I would agree. You're muted, Roy.
You're muted, Roy.
Did anything shift positively or negatively with your investment thesis and Nebius for any of you guys? Or is it just
shifted positively?
like
I did not expect these type of rates this quickly.
The
and
payback
the 40
period.
to 50, in the payback period, yes, the payback
That's
period
huge.
too.
The 40 to 50 million, it's kind of what SpaceX said. So it's not, I mean, it's obviously very nice that they are already signing deals like this, but we knew it was a possibility. But the payback period on the contract signed in this quarter of, like they said in the inflection event, that the bare metal deals had a payback period of maximum 3 years, and that the AI cloud well under that, so like much higher margins. But 1 year and 10 months, it really makes a huge difference for the ROIC. So
yeah,
to me, that
and
was
even
the main part of the.
Yeah, and also their deal saw an average yield of more than 20 million per megawatt. That's more bullish than I expected. For Q2 of this year, I was expecting 20 million per megawatt later, not this early. So that was really bullish for me as well.
What about for you, Neil, or Tevis?
I mean, I'm not getting bearish after this, right? It's. I mean, it just gets better and better. So I'm just very excited to see what's going to happen in 2027. Like this is acceleration in growth.
Yeah, and especially like once they announce 2027 guidance as well next quarter, like I think
They said they're going to do it, right?
Yeah, they said later this year, which I assume would be
later
Q3.
this year.
So later this year has to be in next quarter because the Q4 call is next year. So.
Exactly.
Or just December 31st. Like, hey, let's send out a
Happy New Year.
It's gonna be a good one, yeah.
But it was interesting because Arkady said when he was talking about the 40 to 50 million, he said, and some are even higher than this. So I expect that number is actually going to increase even more, which is kind of baffling to think about, especially because like on one hand, CoreWeave is saying like, hey, we're still selling, what was it, the A100s. And then on the other hand, they're saying 40 to 50 million per megawatt as a result of all this staggering demand for shorter term contracts. And like you put those two things together with their depreciation schedule of 5 years, like this is going to be like just a money printer for the business as they scale to more data centers in 2027. It's just going to be baffling.
And the ARR range can be between 20 to 35 billion dollars. Like it's crazy.
Yeah.
Their entire market cap right now is $50 billion.
Yeah. No, I was telling you guys, and I'll just say it for the chat too. Like I given this report, I can't see a single credible bear case. It's not like just a whole thing against data centers, not just Nebius. Like I just don't. You can quibble and say, well, maybe the price is a little bit rich for like right now, but like you said, Tevis, 50 billion market cap, zoom out a few years, it's going higher. Almost certainly. I mean, there's no guarantees in the market, but it's tough to see it any other way.
Yeah,
really
they're probably going to be doing their ARR market cap right now in 2028. Like that's 18 months away. We're talking they're going to be probably doing 40 to 50 billion in ARR. Like, what are we talking about here? And I think what Tevis said about the Vera Rubins, like only CoreWeave and Nebius are trying to get these live, so they can just like they did with the auction and just it's going to be a bidding war.
Yeah, and they said for the auction it was 15% higher than their highest price.
Yeah.
It's like 15% above their previous record. Like,
and that's
it's only going to be higher.
The customer who won the auction. The customer who won the auction wants to go in for the next auction. They said this as well.
Yeah, so it's just we're probably going to be like 60, 70, 80 million a megawatt.
They don't mind paying more.
Well, yeah, that's the thing with like SpaceX entering this in the comments of like, hey, we're just Nebius, and that they expect to receive a large amount of Vera Rubin. Who else is getting Vera Rubin? I mean, like there's some going to Microsoft, but they're using it internally. SpaceX, Nebius, CoreWeave. That's it. Like obviously down the road, others are getting them too, but those are the top of the supply chain right now.
Yep.
And they're like, it would be one thing if you're like, oh, well, it's a short term, it's not going to be like this in a few years. Well, we don't know that for sure. You're probably right, but when the payoff period is like a year and a half, I mean, like, what are you talking about? It's
right.
It's free. Oh my goodness, it's ridiculous.
And that payoff period, I think, is going to contract even further as we extend to 27 and beyond. Right, the price that they're going to command with the megawatt, the millions per megawatt is going to increase. Their flexibility. I mean, prepayments now is like the standard. Like, I just think overall, it's just going to get a way better profile.
Yeah. They said they're averaging, 60 to 70% prepayment on contracts? Is that what, I don't know if you guys, is that what they said?
Something like that. I think they said over half.
Yeah. Overall, though, it's a really good quarter. I feel like I heard everything I wanted to hear. I was hoping they would announce like an asset light model partner. I thought that'd be kind of cool, but maybe they're saving that for when it's more, another few quarters of the pipeline. But overall, I heard everything I wanted to hear, and more than what I wanted to hear and expected. So really bullish quarter for me.
I mean, didn't SpaceX say that their buyback period, or they're seeing the buyback period at under a year or at a year or something like that? So
yeah.
SpaceX?
Yeah. SpaceX AI, whatever.
What do we think their capex is going to be for 27? Like what they announced?
Oh man,
Nebius?
Yeah,
like
double
50 billion.
Yeah, I was gonna say double what they did this year.
That's crazy.
Probably their market cap right now and capex next year.
Which is super bearish, right?
Yeah, very bearish when the payback period is a year and a half. Very, very bearish.
Yeah. Stop building. Come on. Enough is enough. Pay dividends.
That's what Martin Shkreli thinks. Yeah.
Yeah, seriously, at this point.
Give me a fat dividend.
Cool.
I bet. I think that in this, like, again, like they did a great job of the entire report. Numbers are very, very good. They did a good job handling some of the questions, which, were fair questions to ask. I still think that bears are just going to do what bears tend to do, is just double down on the same talking points, ignore the data, ignore what they're saying here, and say, oh, this is like a one-time thing. This can't last forever. And they're just going to be wildly offsides. But hey, let them.
Dude, isn't there like a 20% short interest on this as we stand?
Bloomberg should, I thought 29. Either way, it's in the 20s, which is still ridiculous.
But most of it is because of the convertibles, so there won't be any squeeze. Like, I don't expect. I mean, we can have days that we're
most
used
of it
to.
is because of convertibles. I don't know about that.
Yeah, most likely, yeah.
For CoreWeave, it is 20% without that. So
without what?
They don't have the
convertibles edge.
Yeah.
How can you know? Like,
well, they don't have much in the way of senior convertibles, so that's what I'm saying. Versus Nebius, that's the model that they went. Corey's like, hey, let's just take on debt.
I'm not sure if it's most of it, but at least a good part.
Yeah,
but I mean, I bet Michael Burry will say he covered the short last week.
Yeah,
and let his subscribers like melt with him.
He shorted at what, 221, right?
It would be like really, really a bad look to cover after just the stock going down because you announced it.
Dude, I wouldn't be surprised if he comes out saying, I'm doubling down on Nebius. My price.
Yeah, that's also
it's 100% doubling down.
Yeah, most likely, yeah. I hope so.
I do too.
So if they're selling an average of 20 megawatt deals, 20 million per megawatt deals, like, do we think ARR is sandbagged heavily
for this year?
Yeah, because they're closing 20 million per megawatt in Q2, so Q3 could be 22.
Yeah, but closing in Q2 doesn't mean the contracts start in Q2.
Right.
Yeah,
I get that.
The thing with Nebius and also CoreWeave is they've already yeah, there is some supply coming online, but for the most part, like they've already made these agreements, they're already set. So those are like very easy numbers to guide for. Versus like next year. Next year is heavily sandbagged, especially for Nebius given these numbers.
I would agree. Yeah. So are we waiting until? Go ahead.
What was the ARR for further out for Nebius?
I think analysts are guiding between 16 to 18 next year, guys. Right? Something like that.
No, I think it was like, wasn't it like 12 to 13?
Yeah, I think I have a midpoint of maybe 14.
That's revenue,
actually.
probably, no?
Yeah, either way, I think ARR and revenue is sandbagged or very underreported.
Yeah. No,
They'll probably be doing 25 billion.
I just want to see what some analysts have to say, like D.A. Davidson. You know, the guy, the analyst that wrote the report liked my post.
Really?
Yeah.
Hey, following you as alpha.
I mean, he follows me since the beginning. He was one of the first analysts covering Nebius, and I mean, he had always like, I mean, not a good, like I can't say it was the most sophisticated report, but it was, so it was right. But yeah, I mean, it just didn't make sense to me, the logic. I mean, yes, Vinland could have delays. I said that, but the logic like was using the authority argument that he had a site visit. I mean, the site visit was driving around and taking some pictures from the outside. That's not really a site visit. I mean, I have the pictures from the report. I stopped posting like screenshots of sell side research because I got an email. Morgan Stanley like reported me to X, and they said like next time we delete your account or something like that. So I went and deleted all my posts with sell side research, and I saw like the lists they report like 1,000 companies, Morgan Stanley, 1,000 accounts. Sorry. So I didn't post the images, but I mean the photos are really like 200 meters away from the building. Like you can't say if it's going to get a delay.
I see a wall. Yeah, it's
like you just can't. I tried to show to some people that like even understand the infrastructure better than me, and they said, I mean, I have no idea if they're going to get a delay. This is just like even Unterbrook did a better job with the drone footage, like to see the bloom cells. But again, it could have delays, and it still could have delays after this reassurance from management. I just thought it was crazy to lower your target by 30% because you allegedly had a site visit and you listened to a public hearing that was live streamed online. That was the authority arguments they used.
Speaking of Morgan Stanley, who do we think this large US-based quant trading firm is? And like, how would that firm not be pumping this right now if they're working with them? Like, is this Citadel? Is it Jane Street? Like, who do you guys think this is? Because it's over $1 billion of ACV.
Who are all the quant besides Jane Street and Citadel? Who are all the others?
Two Sigma, Renaissance.
Honestly, Citadel makes sense.
I would say Renaissance. Or maybe Michael Burry opened a company.
Goldman. That's interesting.
Yeah, Goldman I think is reasonable. It's not Jane Street. Jane Street's a Corey customer.
I mean, they can have multiple customers.
Well, we know it's $1 billion deal, so like
for Corey,
I guess you could, yeah. So it's sizable enough that I mean maybe, and they operate their own databases as well. So
I'm just saying this because it's quite common to have like for example, Shopify has Google and Nebius.
Yeah, so this will become an orchestration at some point, but yeah, with that size of a deal, I'd be a little surprised. But
yeah, they can't really be spending billions on compute. I mean, maybe they fire all the analysts and just let the bots do the work.
So price targets from you guys. If you don't do price targets, totally fine. I saw a few comments, and that's always a fun thing. Do you guys have price targets, either long term or short term on Nebius?
Long
And are you
term,
revising up?
the company is going to be worth multiple hundreds of billions of dollars. That's
Agreed.
the target for me. In
Yeah,
the
that's
short term,
that's
I don't
my
know.
internal target.
I mean, my price target got hit this year. Mine was $200. It got hit, and revised it to 350 for next 12 months. So I'm going to stick with that for now until that gets hit.
It would have been more fun if you just kept it at 200, and then you could just be called Bear on Nebius.
Yeah, it's like $7 away, guys.
Well, I don't have really a price target, but I think we should see above $300, which means an all-time high, like in the next couple of quarters.
And all of this is without any ClickHouse IPO, whatever, just purely in Nebius's business. And 3 months from now, we could just get them to say, oh, ARR 20 to $25 billion. Like,
Yeah, actually about ClickHouse, I think we should hear about it soon. Like they should be raising more capital soon, because they really like increased the AI spend by, I think the CEO said, by 60% since the beginning of the year, something like that.
60x.
60x. So they're,
a little bit
I mean,
different.
it's normal to burn capital, so they need more capital. So I wouldn't be surprised if we see like in actually like very soon a valuation of like $30 billion plus for ClickHouse. Like when I was at Nebius Inflection, I spoke with a lot of people, and out of nowhere, I didn't even know it was, but what was the company that pumped really hard? They had a deal with Corey, Backblaze. You guys heard of it?
Yeah.
Like I was talking with the CEO for like a long time, and I didn't even know it was their CEO. And the guy just told me, like last week or last month, I don't know, whatever. I went to like one of the most famous VC conferences, and I never saw such consensus around the company like I saw with ClickHouse. Everyone is crazy with ClickHouse and says like it's going to be the next Snowflake and whatever. And he was like, "Oh, do you really believe in ClickHouse?" And I said, I mean, I'm not an engineer, so what I know is not as important and technical as what he heard in the VC conference and whatever. But I said like, yeah, retail investors in Nebius are really bullish on ClickHouse because the data points to it potentially being like a really huge company, and that will be like, it could be tens of billions for Nebius. Maybe not tens of billions, but more than $10 billion in free funding. In the long
I would
term,
agree.
which is a lot.
Also, analyst estimates, it looks like from Perplexity and Claude, are saying 11.5 billion for 2027 is the revenue estimates across analysts.
Yeah,
So
revenue. ARR we
revenue.
don't get.
Correct.
Yeah.
Yeah.
Which is too
Waiting
low.
for market open. It is too low, I agree.
I mean, it's in 5 minutes, so we might as well.
Yeah, 5 minutes. Yeah, CPI coming in even was really nice for the market. A lot of names added a little bit of momentum too, including ours, Nebius and CoreWeave here. So,
yeah.
And don't be, like a lot of times when you see these massive gains in overnight trading or pre-market, guys, if you're newer to the market, you may see, well, you can see it either direction. There might be a lot of buying pressure too, but people will take profits. There's short-term traders always. There's people that are like, hey, I've made a lot of money. Let me get out of these. And so if you see a big spike down, it doesn't mean, oh, everything that we just listened to is just now invalidated. So
yeah. What a quarter, man. Now I'm really just like super excited for Q3 with getting 2027 guidance. Like that's going to be so much fun. Because I don't think the market expects what they're going to come out with, honestly.
Do you think that's going to be?
Good.
like full guidance, or just like, hey, our annual run rate target that we're aiming for at the end of next year is this?
I don't know. I'm trying to remember in Q3 last year what they did. I think they gave ARR and revenue. I don't know if they gave CapEx for full year. They might have given it for like the quarter. But I forget, honestly. I know they gave ARR and revenue. I don't think they ever really gave EBITDA. Maybe they did. I could be wrong.
And the most we will get is probably in 2 quarters from like in Q4. So start of 2027 is probably where we get the full package, but hopefully we get something for calendar 27 in Q3.
Yeah.
While we're waiting on market to open up, with your permission, Tevis, I'll shout out a stream that it's tomorrow. Is that okay?
Yeah, I mean, go for it.
Okay. Yeah, we're doing, Nate and I, of course, are doing the Data Center Monthly. We moved it up a little bit this month because of these 2 earnings calls. So Jose is our guest. He is, of course, a big CoreWeave bull, also an Iron bull. Nate, big Nebius bull. You know, I like them all, but I especially love CoreWeave. So we'll talk about these earnings calls there. We'll go over macro stuff. We're going to talk about what the bears are saying, these massive capital raises and everything. But yeah, it should be a really fun time. So 7 p.m. Eastern time tomorrow night.
If you guys don't follow Roy and Nate, their handles are right below. Go follow them. Data Center Monthly is a great show. So you do Data Center Monthly and Data Center Weekly now?
Yes, yeah. I've decided to not do.
Yeah, daily.
It's funny. I've actually considered doing daily, but
at this point, I mean, there's enough news.
There actually is. Yeah.
But no, like I've decided just to keep my sanity and like to control kind of the time that I'm spending with this, especially like during earnings season. It's so much. It's exciting. It's awesome though. I don't do the weekly when we do the monthly. So it's basically in lieu, and then Nate and I, and always with a guest. So at some point, Neil and Manuel, we already talked about you guys. We're like, in future months, we're like, we might have to have a weekend show just because it'll be a better time for you guys rather than, I don't know what time that is in the morning, but it's like 3 a.m. or something.
Kevin
At what time do you usually do?
7 p.m. Eastern, which is, I think it's 1 a.m. for me, and it's midnight for you.
Yeah, so we this will be just the 3rd one of these Data Center Monthly. So we're flexible moving around. We already talked about maybe doing a Saturday show in a future month when we're inviting you gentlemen on.
All right, we're about to go live. Market opens in a few seconds. Kevin says, "Got to go to work." I don't know why you have to do that today, but
yeah,
sure.
Aren't you retired if you're a Nebius shareholder?
Exactly.
I mean, Nate, are you quitting your McDonald's job?
Actually, I'm about to make a post about it probably.
make a post that you just bought the franchise. Like you now own the whole thing.
I bought the Midwest region of McDonald's now.
It's okay.
We're kind of, if you look at the daily chart, we're at resistance here.
When are you a TA guy? When have you become a TA guy? I didn't know that.
I learned with Burryman.
Oh, dude, if we break out of this, it's gonna be.
I'm correct, right? Not winning.
Selling off hard.
Yeah, I think we're going to end the day at flat.
Flat.
The day flat.
Yeah.
For Nebius
is at 109.
I don't think it's impossible, but I was joking.
Okay. It's like if CPI came in red hot, maybe, but yeah.
But we've been seeing a lot of AI stocks with great news in the pre-market pumping and then like correcting. But I don't think it will happen with CoreWeave and Nebius.
And we'll see.
Like Riot yesterday with the Anthropic deal, they were up like 25%, whatever, and they closed like flat or even red. I don't know. Let me check.
Bro, if Nebius goes red, I'm gonna buy a lot more Nebius.
Yeah.
And like Michael Burry will probably write a post soon to try to save his ass. And the lunatics will follow him. And then like in 2030 we'll have another movie. Instead of the big short is the dump short. I'm seeing it all.
I just
Yeah,
think it's insane the
Nebius-
fact that he can just say he's shorting something and it drops 15%. He could just trim right there.
Oh.
Like,
Yeah, that's what
I
they
mean,
all usually do.
Markets are efficient, man.
Yeah,
If Barry
Nebius has
says it's
gained
a short,
Nebius has gained 26 Palantirs today, and Corv is up 20. So
all right.
but Corey is holding better, I guess.
yeah, the CO went on. I've not seen any of it yet on
Over
CNBC,
110.
so it may be king off of that. Plus, analysts had time enough to write their notes and do upgrades and stuff. So
I
Nebius,
also feel
it
like
was-
yeah, and sentiment on Corby I feel like was just worse in general.
Look at this, man. It's
So-
just like on an island up here.
Wow.
let's not fill that gap. Let's just keep going.
Yeah, exactly.
It'll probably fill at some point. Like these are so volatile. Like it doesn't go up or down in a straight line for long.
But I can close all of my puts and my covered calls, and
Oh,
we're good.
Bloom Energy is also pumping, maybe because of Nebius.
Should because of Nebius.
Wow, Bloom is up higher than Nebius is. What is
Yeah,
this?
it's up 16%.
I mean, like with Vineland being on track and then switching to Bloom, and that seeming like it's going well, it would seem to invalidate or at least very much weaken that bear talking point on the Scandium, just the sourcing of it. So, yeah.
All right, I think we should wrap there. What do you guys think?
Yep. Yeah, I'm good to wrap.
Yeah, I need to have lunch.
Thank you, everybody, for joining us this morning or afternoon or evening, I guess, depending where you're from. Congrats to Nebius investors. Follow everybody. Their handles are attached. And we will see you next time. Goodbye.
Thanks, everyone.